So that is a way to get ideas. Oh. Ah. So things to think about when you're looking at these stories and whether or not, and how to come up with these ideas are companies merging? Is the merger likely to fail? Has the merger been announced? If so, then the acquirer's price will rise, the target's price will fall when the merger fails. Generally, when companies merge, the acquirer's price always goes down, the target's price always goes up. Are competitors merging? Will this increase or decrease the company's market share? Will a merged company even be a competitor, or will that business just be divested? Are suppliers competitive? Oligopoly, monopoly? What would change their supply? Are customers competitive? What would change the company's demand? Another thing to do is just check the day's winners and losers. So for example, this is only US. But here are the biggest winners and losers. And why did they gain or lose? There must have been some material announcement. There must be some information that you can take out of this to say this is an event that has happened. Is it likely to affect other companies? Who else did it affect? What are the second-order effects of this? And just following these news streams, in a sense, will give you a feel for what sort of ideas to put on.
Oh, that's weird.
What?
I know why Bank of Ireland went up by 12.
Is it likely to continue? That's actually a really good example. Bank of Ireland has received an explicit guarantee from the Irish government. It's being allowed, essentially, to sell off its bad debt to a government-held bad bank. So essentially, it's being subsidized by the government. Now, if at any point in time that debt, any losses on that debt can be clawed back from Bank of Ireland, their stock will drop like a rock. If it turns out that what the government is doing is illegal, which is a possibility, their stock will drop like a rock. There are things you need to know about. So if you see this gain, is it a short-term gain? Is it an overreaction to something in the market? All of these numbers are things that can be investigated to give you some good ideas, even if the gain is already made on the stock itself. So, there. Is the government intervening in national industries? How likely are they to continue? Are political pressures changing? Is the news in a sector relentlessly positive beside poor performance? Think financials. So of late, all the news in financials has been good. Their performance hasn't changed and their assets really haven't been recovered. So are they likely to have a second fall, or is the government support that they have received to date been enough to support them through the crisis? Are entire sectors over or undervalued? One could argue that, say, 2 years ago, oil was massively overvalued. And so everything in that sector, all from upstream to downstream, was ready for a fall, out of proportion to the market fall. That's pretty much it. So, first any questions, and then if you want, I'll go through an example with Nippon Steel.
You talked about the value of information and how by the time it hits the market. One of the things that struck me a couple of days ago was that also I was wondering about where the information comes from. Like you go to read Reuters and you expect that's news, but I was listening to like Radio 4 and they're talking about Rio Tinto getting into deep sewage in China because basically China's suing them going, you gave away proprietary information. And they're like, we didn't even know that was illegal. And I thought, it's kind of weird that I'm hearing about this on Radio 4, and I thought, at first I thought, wow, this is really good information, and I thought, wait a second, if it's on Radio 4, then everyone must know it, you know? So does that balance out? Does it really make much of a difference where you get it from? Because
it does make a difference. Some places break earlier than others. If you happen to speak a foreign language and you are investing in foreign companies, you look at that country's news first. Odds are, before it makes its way across to the Associated Press or any of the other news wires, you might be able to get a leg up on investors in the major markets. So the US is really bad about this. If you have, I don't want to call it insider, if you have fairly good knowledge of a given country's markets, then by the time the US opens, the ADRs, the American Depository Receipts, for that company's stock in the US, their prices may lag their prices in their home market, though not much anymore. There are lots of people doing that arbitrage. And information that may hit other companies in, say, for example, the US market, may already be available in other countries. Something to look at. Any piece of information you can get that other people do not already have in some measure is a good idea.
As long as you're not from the inside. You didn't get that information from the inside.
As long as you didn't get that information from the inside.
For us, as
You'll
you
never know. And then the question is, what is the inside?
Exactly.
Because that's the whole thing about the Rio Tinto
Well,
scenario.
insofar as the SEC is concerned, they've been extremely lax these past 2 years, so meh, who cares? Any other questions?
So,
Yep.
what would be wrong with so looking at the news and then waiting for the news to have its effect on the market, and then just doing the opposite of what the market did immediately?
Because not
Is that-
everything is an overreaction, right?
Okay.
Some things, so information becomes available, the prices in the market reflect the information. At some point in time, a news story comes out. Now, whether most people who, most of the volume of the trade that shifted the price came after or before the news will greatly affect whether or not the price change is an overreaction. If the price change came after the news, it's probably that the people who made the investment are less informed than would otherwise be the case, and so their reaction may be an overreaction. It may also be an underreaction. If the vast majority of the volume of that trade came before the news, then that information was disseminated to the markets via any number of transmission mechanisms before a news article hit the AP Newswire or something like that. In which case, it's less likely that it's an overreaction, because odds are it's already been priced in. Sorry, I'm just hand-waving here. Extremely general, and nothing of what I say is 100% true.
Most of our trade ideas do seem to be authors picking stocks that they think have been overbought. Like the big dominant signal in trade ideas is buy after a large increase in price. Sorry, sell after a large increase in price, buy after a decrease in price.
And it's a pretty good signal, because contrary to the mutterings of Eugene Fama, the markets are not efficient. They might be weakly efficient. Okay, then with what time I had left, I was just going to go through a quick example with Nippon Steel of what you could get into. So if you wanted to be a steel specialist, what you could do is... Right, so it is going to upgrade mills for Asian demand. So Asian demand is increasing. We could look at that. It is going to spend on a new coke oven. It's going to invest in mills. Another steel company has its profit boosted by the auto industry. So let's see here. Where is it getting its demand from? Doesn't say. It's upgrading a blast furnace. That's all. Building another blast furnace.
possibly a time to go to Wikipedia and find out what is a blast furnace. What is